Welcome to Commercial Real Estate Pro Network's CRE PN Radio. Thanks for joining us. My name is Jay Darren Gross. This is a podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Scott Lyons. Scott is with the global commercial construction firm DPR. And that's where Scott is the national commercial core market leader, where he is directly responsible for understanding the needs of DPR's customers and delivering predictable results. And in just a minute, we're going to speak with Scott about leading your commercial construction team through these volatile economic times. But first, a quick reminder, if you like our show, CRE PN Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We'd love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Scott Lyons. Welcome to CRE PN Radio.
Morning, Darren. Pleasure to be here.
Well, I'm delighted to have you and looking forward to our conversation. But before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Sure. I've been in the industry for about 26 years. The first 16 years I've really rotated around the Southeast building large commercial projects in various cities. The following 10 years, I reside in Central Florida, I live in Orlando, and I led our Orlando and Tampa offices here at DPR for the last decade, in really kind of a growth mode and through a couple of challenges, but really had a lot of fun doing that. And about a year ago, I rotated into leading our commercial market here at DPR. And so, as you mentioned, commercial is really, it's one of 5 markets that DPR operates in. We operate in life science market, healthcare, higher ed, and advanced technology and commercial. And so I head up a team that really just connects a lot of dots across the company in our commercial market.
Gotcha. And just to be clear, is DPR strictly a general contractor, or do you guys have any kind of a portfolio?
We are a general contractor. We operate in the United States as well as abroad in Europe and Southeast Asia. But we are a builder at heart and primarily a general contractor.
Got it. And in the construction world, especially as a general, is any of that, are you doing any of the construction directly, or is most of this hire out the subs and you guys manage the construction, the direction of the project?
No, it's a good question. So we've been in business for 33 years. And really, Darren, when the company was founded, we always wanted to be a builder first and not a broker. And so we do self-perform a lot of the trades, primarily concrete, drywall, and a lot of other things. And so maybe to paint a picture differently, so we've got 10,000 employees or a little over, and more than half of those are skilled craft. In other words, people that put the work in place in the field. So that's something that we embrace and support, and really trying to change the world and the industry by way of doing that.
Yeah, no, I know there are those that are strictly paper, and I like the well, I mean, it works different for different projects and that, but it's always nice to know that you've got some sort of direct control or you're performing some of it. Right. So in the asset classes you focus on, you mentioned there's 5: commercial, life science, health, healthcare, education, and was there one other one?
Advanced technology,
Advanced
which
technology.
is primarily data centers in this day and age.
Got it. And are you 100% new construction, or do you also do any kind of tenant improvement and betterments?
Good question. Yeah, we do. About 15 to 20% of our business every year are projects really kind of under the $5 to $8 million range, and a lot of those fall into a tenant improvement kind of project type, and there's a strategy behind that. Really, we want to be able to service customers for both projects, large and small, which depending on where the market is, that helps us stay pretty nimble. So we do TI is a good part of our business.
Gotcha. And as far as construction, I'm always kind of amazed. Just what all is involved in construction. I mean, you drive by these large buildings and every day and assume that they've been there forever, kind of thing. But from optioning the ground to getting the plans, the permits, financing, material, labor, time, seems like it's quite the. Or I guess what I'd ask you is, what's your perspective on the time it takes to build something? And I guess even back up just one more step is the size of the projects that you guys are doing. These don't sound like they're smaller projects. They sound like they're significantly larger projects. What's a small building for you versus a large, and then kind of what's a sweet spot?
So, well, back to your first, the larger projects obviously do take a significant amount of time and momentum before it breaks ground. But a small project, again, I think our average size project, because we do so many, is probably in the $8 million range, as a company. But that's because we churn a lot of the smaller ones just on an ongoing basis for existing customers. Call it a sweet spot is 50 to 100 million in really any of our markets. It's a spot where projects of that scale tend to get built once there's a decision at some level within a customer organization, and you can kind of churn through those in an 18-month time frame fairly regularly. The larger projects, Darren, and these are the ones that we're seeing kind of hit pause over the last 18 months, especially the very large ones, right? Because just the amount of an investment in, say, a $500 million project, and the commitment, the planning, the entitlements, like there's so much that goes into making those projects just to get to a groundbreaking. And in our economy today, that's caused a lot of our customers to pause, right, and reevaluate for a multitude of reasons. But when they do hit the ground, I mean, they're phenomenal projects. A 500 million or $1 billion project is a different animal than a 70 or $80 million project. It's kind of almost a business within the business, and but we thrive on them. We very much enjoy them, and think we do them pretty darn well.
So going back to kind of where I was trying to get to, and you kind of hinted at it, is the time that's involved before you even break ground. If it takes 18 months, approximately to go from the, first shovel of dirt to the completed project, how much time are we talking from that option of the ground before the first shovel? What would you expect in a go forward economy, as opposed to kind of where we're at right now?
Yeah, sure. So for an 18-month project, and I've got several in my head bouncing around, it takes a year, Darren, to kind of like to get some alignment around hiring the design firm, hiring the contractor, evolving the design over the course of the various iterations to get from a concept all the way to construction permit docs. And so that takes a year to 14 months for a project of that scale. But you didn't ask, but I'll offer anyway. One of the critical things that's happening, which COVID really exacerbated, was just supply chain issues that we've all heard about. And so during that time frame, there's certain pieces of the building that need to get ordered and released before you put a shovel on the ground, just because of it takes electrical gear to show up these days, and that's critical to finishing your building on time. And so some activities do actually happen during the design timeframe.
Got it. No, it is crazy, and just again, I think I've always had the picture when I have the contractor coming to my house to do some work or whatever, a little remodel or something like that, that he's gonna show up with a toolbox in the morning and they'll be done, by the time the end of the day, maybe the end of the week or whatever, and next thing I know, there's a backhoe on my front yard and there's piles of dirt, and it's like, oh my God. And just that time element is something that I think a lot of people don't necessarily consider when you look at a big project. So we've been through COVID. I don't know. I assume we got the bell rung the other day that we're officially done with COVID. But what are some of the biggest changes that you've seen in the commercial construction prior to COVID, as opposed to what we're looking at right now?
Because we started off, these are interesting times. So pre-COVID, Darren, there was, depending on what geography you're talking about, there was a lot of ideas and developers, a lot of momentum behind just, call it new office. Corporate customers that were thinking about new headquarters buildings. And, a lot of that has been put on pause to the extent, like we measure it pretty rarely, but, since the beginning of 22, 50% of our awards are in a holding pattern right now. And I'm really talking strictly about commercial office, right? So the changes are, multifaceted. I think corporate America is trying to figure out their workplace strategy and their work from home. Are they going to, require people to come back 5 days or 3 days, or, with certain customers, maybe not very much at all. I think the other challenges that are presenting themselves, really not COVID related, is if you look back in the 80s, just there was a ton of office building development, right? I mean, just during the Reagan era, there was a lot of tax changes that really incentivized massive amount of development. And so all those buildings are now, 40, 45 years old. And so there's this, unfortunately, a lot of these buildings are going to be obsolete, right? If they're Class B, Class C office space, when corporate America renews their leases that are coming due over, the next several years, there's probably this decision to, either downsize their footprint, to move to, call it what we call like the trophy office buildings, the really Class A, which we do see a continual trend that those projects are getting built. There's momentum behind those trophy office buildings, but it's going to be tough. If you're a building owner of those 40, 50-year-old buildings, Class B, Class C, well, just what do you do with it, right? If you can't reposition it, if you can't really invest in it to put the amenities in there that the companies in the talent think they want in an office building, it's going to be a tough couple of years. And I think it's just going to take some time to really churn through what happens in the office market over the next, what we're thinking it's going to take, 3 to 5 years to kind of get through it.
Yeah, it is dramatic, the change. I mean, there was like I said, before COVID and going back to the 80s, I remember growing up in the Midwest, how these big suburban office parks were kind of the rage, and massive in structure. I mean, just all the square footage in that, but kind of a neat little setting as opposed to the downtown office kind of thing. But now I was just in one here in Portland here just last week, and I mean, I think I walked, a couple miles to get to the party I was trying to meet, and I was amazed at all the empty square footage. Um, it's like it is kind of it's just it's a weird thing, and like you said, if the corporate America decides they don't want that, or can it be repositioned, or I mean, it's just I can't even conceive what, would they knock these things down? Do you think that's potential, or do you think it's more of like reposition it to a different asset class, or is that even a possibility?
Well, I do think it's probably going to be, it's going to be a little all of the above here. And you know, so if, if you've owned the building for quite some time and you're forced to, refinance it here in the next, 12 months, but the valuation is gone down, and you don't really, your tenants aren't, re-signing their leases, or your vacancy rate's incredibly high. You might not have the cash flow. You might have to give the building back to the bank, and that's unfortunately probably going to happen, right? Depending on how much you read or listen to, the concept of repositioning buildings is, think Pacific Northwest, think your gateway cities, San Francisco, New York, definitely. I mean, there's a lot of towers there that people are, studying really hard to see if they can, turn those into, convert an office to a multifamily. And for some, it works, because maybe like the floor plate's small enough, but you really can't have apartments without windows, right? And so a lot of these office towers are designed such that the space just doesn't really work for a conversion, and so that's tough. So not succinctly answering your question, but really I think it's just going to be, can some landlords just wrestle through it and refinance and maybe, reduce their rates just to kind of keep the cash coming in, and get on the other side of it and let interest rates come down, and be in a better position on the other side. So it's going to be a lot of different things are going to happen.
Yeah, no, your perspective of time, and just, it's a matter of time to figure out, hey, what do the people want, and whether or not you can hang on to your building. If you're, if you are facing a refinance situation right away, that's going to be a kind of testy time if you get an empty building.
Yeah.
So interest rates, have they affected a lot of your work then too, or is it more a matter of, well, let me ask it this way. Do you think the 52% of your work that's on pause right now, is that more interest rate driven, or do you feel like it's more of a COVID work relationship situation?
That's
Or
great question, because I think it's both. It's almost obvious, I think, to our customers who put their buildings, their projects on hold. Obviously, everybody has a different crystal ball, and nobody's really exactly sure, how high the Fed's going to go. But generally speaking, what our crystal ball is saying is that, okay, they're going to cap out maybe at some point this year, and they hopefully start coming down at some point next year, and say it's like this time next year. We think that those 50% of the projects that haven't started yet, a good portion will go. And we think, we believe that because they're more, call it the trophy product. They're positioned in cities and locales that, it kind of checks all the boxes. It's live, work, play. And so the adjacencies of food and bev, retail, fitness, and all the amenities, the indoor, outdoor space, the sustainability built into the design. We think there's going to continue to be an appetite for those buildings such that, again, corporate, those who sign leases there's still a war for talent out there. And so they're going to want to move to the building with the phenomenal views, right? Now, it's not going to be all of them. But we just are anticipating that by the middle of 24, back half of 24, some projects are going to crank up again and we'll get on an upswing. And luckily, because our business isn't solely based off of commercial, it's really 1/5 of what we do. Our other markets are really, there's several that are up right now. And so it's kind of just this cyclical thing that we're hopeful that it bounces back, back half of next year.
Got it. And I failed to ask you, the commercial segment. Commercial to me is kind of a broad spectrum. Are you guys strictly warehouse or big? Office, warehouse?
Commercial for us, yeah, you're right. It could be defined different ways. For us, it's really office and hospitality projects. So hotel projects are something that we do. We do a little bit of residential multifamily in primarily Texas, but primarily office and hospitality. We don't really do much retail unless it's part of, say, an office tower, right?
Right.
We do some industrial in terms of warehouse, but it's not a main focus.
Got it. And on top of some of the challenges we've discussed, the supply chain, COVID, and interest rates, are you finding are the banks are they hesitant to loan on projects that are a go, or is that even an issue right now with projects kind of in a pause?
Well, their restrictions have probably haven't been tighter since maybe 2010 or so, and I think banks are requiring more equity. And they're asking for executed leases for at least 50% of the space is really the environment that we're seeing, and the banks are seeing the same thing we are. Who's going to come back to work and how many, and so it's going to be tight for a while.
Yeah. So let me ask you, in all of this, you mentioned DPR's employment force of 10,000. How are you able to keep everybody busy in the commercial sector? Do you have enough work to retain your staff and keep the pipe full of projects?
Yeah, call it the nature of commercial construction is, usually when you're heading into a recession, I'm just speaking really on behalf of kind of an industry thing. Generally, people have backlog, and that backlog and we've got ample backlog. We in both commercial and the company, such that we're in a really good spot through, call it Q3 of 24. And so through our lens, when we're pursuing work, and there's still great work out there in the commercial world, it's just, less opportunities than before. We are really zeroing in on those projects that could break ground at the end of 24, first part of 25. And so, so from that perspective, we're pretty darn stable. Plus, as a company, we scaled quite a bit over the last 4 years, even through COVID, and we're really in this kind of concept of marching in place is a good thing for a year or two. And so we're not trying to scale another 25%. And so there's call it a silver lining to this little bit of a slowdown is okay for us.
Got it. Now you mentioned that you guys operate nationwide and even over in Asia. With that, are those markets where you have offices? Is that primarily where you see most of your work, or do you have like a distinct footprint where you guys try and do your work?
Right. So we've got 28 offices here in the U.S. We really love to operate in a called 100-mile radius of those offices. 50 is even better. We want our people to sleep in their own beds at night, and so maintaining that discipline is important to us. For certain customers, we will go to remote locations, but that's call it the exception, not the rule. Really, same thing over in Europe, albeit Europe is primarily an advanced tech market for us and some life science. But so, for instance, we're not really doing commercial work in Europe. And we'll see what happens, over the next decade, Darren. But that's more of just being very strategic in two markets at this point in time.
Got it. And in the as far as the demand, are you seeing certain regions that have more demand than others, or are pretty much all of your offices equally busy?
They are, and depending on the market. So if we're talking about commercial is fair to say is down, obviously, from say 2 years ago, across the board, right? There's some micro economies in Austin and in Tampa, and you could argue that Dallas still has some pockets that are still going strong, but California is pretty slow right now in the commercial market, and Pacific Northwest or Northwest, I should say, has been a tough 6 months up there as well, really across a lot of markets. But we think that's just take a little bit of time to work through, and it'll bounce back next year.
So let me ask you the nature of commercial construction, at least from my perspective, there's a boom bust kind of a cycle to it. When rates are good and demand is good, then it's cranes everywhere and build. And then you reach to a point where kind of like where we're at now, where there's uncertainty, interest rates are high, demand not so much. And I wouldn't say it's necessarily a bust yet, but we've talked a little bit about potential for excess square footage, either be returned to the bank or repositioned or whatever. Do you anticipate when things do settle and get figured out that there will be kind of a boom of sorts, or do you think it'll be kind of an ease into a kind of a steady go forward?
Well, we're obviously we think it's going to be more of a, and even if it's developer, they're leasing to Fortune 100 type companies that we believe like corporate America is pretty passionate about putting their people in a phenomenal place to work. Sustainability is probably finally becoming more front and center than it probably ever has been moving forward. And so again, we think, call it the Class A plus, the trophy office product will still be out there. it won't be a boom cycle. And so we're probably going to be building less because the amount on the market, and we've seen this before, and we're seeing it again to an extent where hospitality projects are starting to do okay, and they're coming through probably more than they were last year in terms of opportunities moving forward. And we also honestly see this repositioning market, Darren, where we've done a decent amount of them, but we think over the next decade, these repositioning, it could be warehouse to office, it could be office to hotel. We've done all the above. That's going to be probably a larger chunk of what we build moving forward.
Yeah. No, well, I've just seen a lot of especially big box retail stuff, either be demoed or repositioned, kind of thing. And I've always kind of had the concept of, God, if you've got four walls and a roof, is there not a way to repurpose the building as opposed to doze it and start over? And I guess it's always a matter of, whatever makes the most financial sense. Well, it sounds like there's work. You have work now. You've got, it sounds like there'll be opportunities in the future, and I guess we'll all kind of find out, what the office looks like here in a few years, and who's in an office and who's working in a back bedroom, and I guess we'll figure that out.
Yeah, it's going to take some time.
Yeah. So, hey, Scott, if we could, I'd like to shift gears here for a second. By day, I'm an insurance broker, and as such, I like to ask my guest a little question about risk.
Sure.
When I work with my clients, I try and assess risk and determine what to do with the risk. And there's three strategies we typically consider. We first look to see if there's a way we can avoid the risk. When that's not an option, we look to see if there's a way we can minimize the risk. And if we cannot avoid nor minimize the risk, then we look to see if there's a way we can transfer the risk. And like I said, as such, I like to ask my guest if they can take a look at their own situation. Could be the market, the Fed, your clients, tenants, supply chain, whatever it is that you are focused on as far as the risk or the biggest risk. And again, for clarification, while I'm an insurance broker, I'm not necessarily looking for an insurance-related answer. And so if you're willing, I'd like to ask you, Scott Lyons, what is the biggest risk?
So I think the biggest risk for us, Darren, is making decisions around in kind of moment of duress. And let me kind of explain what I mean there. So one could imagine that, hey, you're going into a recession. Well, or we think there might be a recession. Maybe it's soft landing, who knows? But guess what? Interest rates are up. There isn't a whole lot of as many project opportunities out there. We better sell a bunch of work. We better just, be the squirrel that goes out and just grabs, every nut that we can. And that rarely works out. And so what we're doing to mitigate risk, really, Darren, is just like radically disciplined decision-making. And so, in other words, don't go out and overextend ourselves. Don't go remote. Don't take on projects for customers whom we don't know. And because history's a great teacher, and just a lot of times that doesn't work out. And so what we're trying to do is stay the course, be disciplined, make great decisions, work with customers whom we just value and really can deliver for, and who want the, and that's, the risk is just panicking. And so we're going to do the opposite of that and just stay steady. Because the macro factors, of interest rates and economy, hopefully this debt ceiling deal gets, done by Congress today. We can't control that, but we can control our decisions.
No, I love your answer. That's one I have not heard, but it's probably the most. I mean, it makes the most sense from a standpoint of in a panic, running around with your hair on fire is not exactly a good way to respond. But if you can slow down and think it through and make a good decision that will not sink the ship or will allow you to continue, that's a great answer. So. Hey, Scott, where can the listeners go if they'd like to learn more or connect with you?
Sure. My email is scottlee@dpr.com, SCOTTLY@dpr.com. You can also track me down on our website and our leadership team at dpr.com. And be happy to connect and certainly appreciate the opportunity to chat with you this morning, Darren.
No, likewise. Scott, I can't say thanks enough for taking the time to talk. I've enjoyed it, learned a lot, and look forward to doing it again soon.
Sounds great. Appreciate it.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Till next time, thanks for listening to Commercial Real Estate Pro Networks, CRE PN Radio.